Hi all. Today we are going to discuss the partner's capital account. You know that in partnership, every partner's capital account is maintained in the books of account of the partnership because partner is totally different from the partnership. And because every partner is the owner of the partnership, so for every partner, capital account is maintained. So to maintain the capital account, we used to have two methods. We use two methods to prepare capital account of the partners. Right now, the first method is fixed capital account. The other one is fluctuating capital account. Right. So in this system of fixed capital account, there are two accounts are maintained in the fixed capital account. The one is capital account of the partner, which remains fixed, and there is current account which is maintained for all the transaction. Right. We will discuss what are the transactions we are going to record in the capital account. In capital account, which is fixed, we are having only the capital account transaction. Right. Whatever the capital is there, that is entered. So throughout the year, this remains same. But sometime the partner introduce the fresh capital, or sometime they withdraw the capital. So those transactions will be coming in the capital account. One thing. And second thing, all transaction will appear other than capital will be recorded in current account. That means all other, the capital, the fresh capital, or reduction of the capital, other than these three transactions, all the transaction would be here. That means drawing in respect of profit, that will be appearing over here. Right. Any kind of profit which has been given from the profit and loss appropriation, that will come in here. Any kind of salary, commission, or interest on capital will be coming here in current account. Any kind of interest charged from the partner will be coming here in the current account, or any kind of loss will be coming here in the current account. So all the transaction will be recorded in the current account except the capital related transaction. So this is called fixed capital account method, where the capital account remains the fixed, and we will have another account that is called current account. In fluctuating capital account, the fluctuating capital account means the account which keeps on changing. Account which keeps on changing. Why so? Because every transaction in fluctuating capital account method, every transaction is recording in the capital account only, whether it is related to introduction of the fresh capital, whether it is related to the reduction of the capital, whether it is interest on capital, salary, remuneration, profit, loss, any transaction will be coming out here, and we will prepare only one account, that is capital account of the partner. Right. So this is called fluctuating capital account and the fixed capital account. This is fixed capital account, this is fluctuating capital account. Right. So this is the first thing we have to understand in this, when the fixed capital account are maintained and when the fluctuating capital account are maintained. So you have to see this thing. Now what are the transactions we are going to record, and what is the format for your capital account? Let's say we have ABC partner, so I'm preparing one partner, A's capital account. So you know that in from class 11, right? This is the format of the partner's capital account. Right. So this is the way how, when the capital is brought in, so cash account debit to A's capital account. right? So यहाँ पे you will write by cash or bank, whatever the means would be. So whatever the amount that is coming over here, and at the end of the year, to balance CD, the balance will be coming over here. So you know that this is the way how the capital account is maintained. And in between, if you have fluctuating capital account, right? Fluctuating capital account, right? So every transaction will be recorded over here. So any kind of profit, so by profit and loss appropriation account, so your profit will come over here, profit by interest on capital account, by salary, commission, etc. will come over here if this is a fluctuating capital account. If you are preparing the capital account on the basis of fluctuating capital basis, and always you will have here the drawing. If you are managing to cash, if the drawing is from capital account, to drawings, if the drawings is from profit, right? From capital, from profit, right? To interest on drawings, that will be coming over here. And any kind of loss, to profit and loss account, will be coming over here. This is the way how you have to prepare the capital account of the partner if that is fluctuating. If that is fixed capital account, then only the capital account entry will come over here. Let's say if we are preparing on the basis of fixed basis, then you will have the current account, right? Current account, partner's current account. I'm not writing the name of the partner, it can be any partner's current account. The format would be same, because you know that you must have studied in class 11 how to prepare the ledger of any of the person or any of the account, right? So here you will have the balances, right? Every transaction will come over here rather than coming over here. If you are getting the profit, so profit and loss appropriation account will come over here. Salary account, then you have commission account. If anything is you are receiving or the partner is receiving, right? So interest on capital account, everything will come over here, right? All the amount will come over here. And you have, let's say, this one, the drawing which is from capital, that will appear in the capital account. But if you are drawing, so to drawing that is from profit, that will come over here, right? To interest on drawings will come over here. Any kind of loss, so to profit and loss account will come over here. And this is the way you can have the debit balance and the credit balance. This is the thing you have to keep in mind. Capital account either will have credit balance or you will have nil balance, right? But current account you can have debit balance and you can have credit balance. If you have credit balance, that will appear in the liability side of balance sheet, right? If you have debit balance, if you have credit balance first, if you have credit balance, so that will appear liability side of balance sheet, right? If you have debit balance, that will appear asset side in balance sheet, right? Why credit balance? Because credit balance means the firm has to give something to the partner, so that is liability of the partnership firm. That is why that will appear in the liability side. If current account have debit balance, that means the firm has to take something from the partner, so that is why that is being shown in the asset side. So this is the way, this is the format you have to follow, right? And you have already studied that in class 11th, so you know that how to prepare the accounts. Just you have to change the name. You just have to change the name of the account. That means current account or the capital account, right? Then what is the difference? The difference between capital, fixed capital, and fluctuating capital account, right? Let's say this is fixed and this is fluctuating. Now what happens? First thing, number of account. Here you will prepare two accounts. One capital account which will remain fixed, the other one is current account. Here you will prepare only one account, that is capital account, right? Transactions in fixed capital account, only capital related transaction, right? Related transaction. And current account, all other. Fluctuating, all transactions recorded in capital account, right? Now the next thing, balance. Capital account will have credit balance and current account can have credit or debit balance. Here capital account can have debit, credit balance, right? So these are the things you have to keep in mind when you are preparing the fixed capital account and or fluctuating. Fluctuating when you will prepare only capital account, in fixed you will prepare two account, right? So these are the difference when you are maintaining your capital account on the basis of fixed capital account and fluctuating capital account. Then one thing more, this is not that important. What is the difference between the capital account and the current account, right? Difference between capital account and current account. So this is your capital account, this is your current account. When prepared, कब बनाया जाता है कैपिटल अकाउंट? When capital account are fluctuating. ठीक है, you prepare only capital account. Current account when capital account are fixed. If you have fixed capital account, then you will have to open the current account. Balance it will have nil or credit balance. It can have debit, credit balance. Both the balances can have, and you have to present accordingly, right? Then okay, when capital account are fluctuating, it can change of balance if capital account are fluctuating they will keep on changing, right? When current account open, it will change but not capital account. So all in all, difference between capital account and current account, when prepared, capital account is prepared when you have fluctuating capital account way of preparing, right? So fluctuating means you will have all the transaction in the capital account, and when you have the fixed capital account, current account में आप क्या करेंगे, all the transaction will be recorded in the current account, ठीक है? और ये कब बना जाता है, when your capital account are fixed. Balance, capital account का balance either will be nil or will be credit balance, so it will appear either in the liability side or it will be zero. Current account, it can have debit balance, credit balance, depending upon if you have credit balance, that will appear in the liability side of the balance sheet. Debit balance, it will be appearing in the asset side of the balance sheet. Change of balance, capital account balance will change if you are preparing the capital account on the basis of fluctuating capital account, right? Current account balance usually changes because it is prepared only when you have fixed capital account. So if you are preparing capital account on the basis of fixed capital account, so you will open current account and all the transaction will appear in the current account, so it will keep on changing. तो ये हमेशा आपका change होता रहेगा. So this is the way how partners capital account are prepared. The format I have told you that how to prepare the item, all the profit and loss appropriation item which the partner has to get, right? They will go either to the capital account or the current account depending upon which method you are preparing. If you are preparing on the fluctuating basis, so all item will go to the capital account. If you are preparing on the basis of fixed capital account, so capital account will have only capital, reduction of capital or fresh capital transaction. Other transaction will go for the current account. And one thing you have to maintain always keep in your mind, if nothing is being given in the question, you have to prepare the capital account only. That means you have to go for the fluctuating capital account where all the transaction will come in the capital account only, right? So if the question is silent, nothing is being mentioned, record all the transaction in the capital account of the partner. So this is it, how we have to prepare the capital account. Thank you.